I think it's time to welcome in our first guest, and we're real excited to, have him with us today. As I alluded earlier, Scott Brown is the private exchange lead at Accenture, and Scott's going to talk about some of the current Accenture reports and kind of where they see the status of exchanges today and where they see it moving in the future. Scott, good morning.
Good morning.
Hey, nice to have you on the program. You up in Chicago today?
I am. It's still we're still waiting for spring. I think it's still a little bit brisk out.
Well, nice to have you on the program today, and it was good having you in Dallas with us too. So we really appreciate the relationship. Scott, give a little background on not just Accenture, but Accenture's position in this exchange space, please.
Sure. So, I think I've mentioned this in the past to others, I think in Dallas, but, we are not we don't operate an exchange. We don't necessarily power an exchange. Our role is really helping private exchange operators and solution providers and carriers think through strategies and, evolving their solutions and implementing their solutions.
Yeah, define, if you would, Scott, to kick off this segment, give your definition of an exchange, because I think there's so many definitions out there. How do you and your team in Accenture define an exchange?
Sure. So I think we have a little bit of a more simplistic view of exchanges. We tend to think of exchanges or private exchanges in two key factors. One is providing choice, actuarial choice in product selection. Today most employers or employees have limited choice in terms of plan selection, particularly in medical. 1 to 2. Part of what we believe an exchange provides is more than that. So not just plan choice in medical, but also a breadth of products. The second piece, which I think is really critical, is the retail-like experience. So much of what people go through today is very much of an enrollment or task experience where, retail meaning, shopping cart, decision support tools that will help people to make those choices.
Yeah. You guys right now estimate that there's, in 2015, 6 million members in private healthcare exchanges. Is that correct?
Correct.
Yeah. And your projections, for the future is what, 40 million by 2018, correct?
Correct.
And where do you see a lot of the activity right now happening? I mean, any size employers moving faster than another?
Sure. So today, I think we've seen quite a bit a large portion of the growth happening in the middle market. So we define that to be sort of in the 100 to 2,500 space, and that's really where we're seeing a lot of the growth, both on the benefit consultant-led models, but also some of the single carrier or carrier-led solutions. We have seen some, limited growth in the large employer space over the last couple of years. Notable employers like Sears, Darden, Petco, Walgreens. But large employers very much still over the last 2 years have been still in a bit more of a wait and see mode.
Yeah, they are typically risk adverse, correct? The large employers.
They are. Correct, and they have a longer sales cycle, too.
Yeah, but it's kind of interesting. I can't mention any names, but yesterday I had lunch with a senior benefit leader here in Atlanta that has 11,000 employees. And, 2 years ago, his feeling on exchanges was, nah, not right. Today, they're presenting to their CEO approval to move into an exchange. And I think it was interesting for his analysis that, and I think you talk about it too, is that there's the cost savings There's the improved engagements. There's actually the better feeling from their employee population that he sees as they move to a defined contribution model, and provides, as you talk about, more choice and more retail-like experience in the complete solution, that his employees will actually be better. And he's got, employees all over the country in different places. So it's just interesting how that's a major employer, normally a little bit slower to react, that's moving pretty quickly to move an exchange. I think we're going to see more of that, right? You talk about the same thing.
Yeah, I think so too. We do a lot of consumer research as well, and one of the things that we find is that beyond just the value to the employer, but also that we find that consumers are interested in new methods. One of our early research found that 83% of consumers were very intrigued once they didn't know what a private exchange was, but once we kind of explained the choice, they were very intrigued by the option. It was something they were very interested in.
Yeah, you talk about you just alluded to one growth limiter, but you talk about two growth limiters that will kind of begin to dissipate. We just talked a little bit about the large employers where you see that, but I think you make a good point in the report about capacity constraints by really the lack of mature solution providers. Talk a little bit more about that, if you would, please.
Sure. A lot of the solutions out there today have, some have built their own private exchanges. Some have partnered or used vendors and various methods. But we've seen a lot more both investments, M&A activity, a couple just to highlight, Aetna's acquisition of bswift this year, Mercer's recent investment in Benefit Focus. And what we're starting to see is these solution providers, many of which, I would call, smaller companies, are starting to build for scale and just continued investments in the market. So we see that as something that is starting to change and will enable further growth.
And I think some of them purposely over the last year or so kind of held back the number of participants they actually wanted to put through the exchanges so they could really get it refined for growth going forward. Would you agree with that?
Yeah, I would agree with that to an extent. At the same time, having worked with many of the sales force, they are trying to sell as much as they possibly can. But yes, they are cautious in terms of making sure that they provide the appropriate experience for the groups as they're onboarding and the appropriate transition. There's a huge, obviously, change management component of this, and it's really critical, as we look to continue momentum, that those experiences for those employers and employees is a positive experience. And we're starting to see that, so we think that's going to help drive further growth as well.
Scott, talk a little bit about savings and how much savings can private exchange produce, and then how are those savings achieved?
Sure. I think there's a couple of ways. Let's talk first about the savings. From an employer's perspective, there are really two primary sources of savings that have been identified today that we can, confirm. One is the shift from, defined benefit to defined contribution, which helps an employer to better stabilize their costs and in some ways shift potentially some of those costs to the employee or employees as they look to trade benefits down. The second is premium pricing. As we start to see some of these exchanges that are more competitive between carriers, we'll start to see price competition. I think there's also the ability to introduce other types of products, higher deductible plans, tiered networks, ACOs that help to drive down the premium. The third piece, which I think is still not fully tested yet, but I think there's an interesting one, and it's harder to prove, which is the impact on employees' overall utilization and their health and well-being. In theory, employees, as they become better skilled at selecting their benefits, should also become better skilled at managing their health and well-being. I think that's something that we're going to have to monitor over time, and I know the benefit consultants and the carriers operating these exchanges can probably speak more specifically to what they're starting to see in those trends. In terms of an exact dollar amount, I think it's hard to say. A lot of that will vary depending upon the employer and their contribution strategy moving forward, and what plans and products they're putting on the exchange.
Well, as we all work, the exchanges and the employers and the consultants, brokers, whoever working with them, as we're building a more educated workforce and a more engaged workforce through these exchange portals, that is the opportunity to improve the whole health and wellness engagement piece that has been really a struggle today.
Yeah, I would agree. And if we were to fast forward and think, the future, more in the future of private exchanges, I think one thing that we'll start to see evolve over time is, a lot of focus has been put on the upfront shopping experience. But, the end vision from most of these solution providers is that this becomes more of a year-round tool to help influence and improve health and well-being. So I think you'll see a lot more over the next year or two in terms of embedding health and health management and wellness types of tools and programs onto the tool to bring consumers back. Transparency tools as people are selecting their doctors, not just up front, but also for procedures.
Yeah, so, the access to decision-making tools around transparency and healthcare, making healthcare purchase decisions, the accessibility to the health and wellness programs, and then, I just think that's a win all around. I mean, you got them engaged during plan design or plan, procurement, where they're choosing the benefits, they're choosing their supplemental health to fill in risks, they're choosing their voluntary to, better, manage their lifestyle, and they're accessing the health and wellness to improve their health and productivity, and to reduce costs that they're responsible for too. I think the end gain is kind of the shared ownership is a win-win for everyone, for the consumers, themselves, as they become more acclimated with this.
Yeah, I agree. I think if that doesn't happen, then all we've done is shifted costs to employees, which won't be sustainable in the long-term future.
Yep. Talk a little bit about, and you talked about it in your report, what do you see some of the accelerators being for in the catalyst for future growth of exchanges?
So, I think there are a couple, just to highlight a few. One is just there's ongoing administrative burdens related to compliance and maintaining with ACA, maintaining compliance rules. We see that private exchanges, we talk a lot of it about the back end, and as we think about exchanges and the importance of the back end. So we think that private exchanges are also another tool that can be used to better manage the complexities of meeting various mandates, ACA, HIPAA, ERISA, et cetera. I think the second one I'll mention, and one of the ones is, as we look to 2018, the looming penalties for Cadillac plans, we believe this will trigger growth. As employers make adjustments to avoid this, the 40% excise tax, private exchange, we think, that will offer, an alternative solution. Our research, I think there's today something like a fifth of American businesses are impacted by these penalties, and as we also look at the large employer segment, it actually increases to somewhere closer to 40%.
Mm-hmm. Well, Scott, listen, I really appreciate you having you on and sharing this with us. I'd like you to have a moment to share some takeaways with our audience, if you would, please.
Sure. I think the first one is just the growth. As you mentioned, we've doubled in 2015. Our estimates say it's 6 million. We see that trend continuing over the next couple of years, which I think is pretty exciting. And the second piece, just around solution providers are continuing to mature their solutions and maturing the business case. So, over the next few years, we think that will help to enable scale. Lastly, just some of the factors that we just mentioned, and again, we're still pretty bullish. So I guess the final thing I'll say is, we still believe that this market will grow to 40 million by 2018. That's roughly 1 out of every 4 individuals that are covered through their employer. So it's pretty exciting, exciting space and a lot of opportunity.
Yeah, particularly when we look back and we parallel with the growth of HSAs, I think this is really rapidly going to eclipse. I mean, it's going to pull HSAs forward too, but some people talk about exchanges following the trend line of HSAs, and absolutely, to your point, is not the case. This is going to accelerate at a pretty rapid rate for a lot of the reasons that you've talked about on this program.
Great.
Hey Scott, tell our audience how they can find access to your reports.
So all of our reports are on Accenture, on Accenture.com. The easiest, the easiest way is probably to just Google Accenture Private Health Insurance Exchange. But all of our reports are on our corporate site and can be found there.
All right, Scott, thank you so much. Enjoy your weekend in Chicago, and we'll talk again real soon.
Thanks, Doug. Appreciate your time.